The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the October 16th, wonderful Wednesday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that, well, just simply tools that help each of us to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call the triple filter test. Actually, it's the tool that Socrates calls the triple filter test. You know, in ancient Greece, Socrates was reputed to hold knowledge in high esteem. One day, an acquaintance met the great philosopher and said, "Do you know what I just heard about your friend?" "Hold on a minute," said Socrates. "Before you talk to me about my friend, it might be a good idea to take a moment and filter what you're going to say." Thus, the triple filter test. And the first filter is truth. So Socrates said, "Have you made absolutely sure that what you're about to tell me is true?" "Well, no," the man said. "Actually, I just heard about it and—" "All right then," said Socrates, "so you don't really know whether the story is true or not. Let's try filter number 2, the filter of goodness. Is what you're about to tell me about my friend something good?" "No, to the contrary." So Socrates looked at this man and he said, "You want to tell me something bad about my friend, but you're not certain it's true?" One last question then. What Socrates calls the filter of usefulness. Is what you're about to tell me about my friend going to be useful to me? "No, not really," replied his friend. "Well," concluded Socrates, "if what you want to tell me is neither true nor good nor even useful, why tell it to me at all?" You know, Socrates, I would have to say, a pretty smart chap out there. The triple filter test, folks, that is the way to live. Truth, good, and useful. Well, let's go check out the truth, goodness, and usefulness of these markets here. We'll take a look at stock charts all day long. You can give us a call at 877-927-6648. Be happy to take a look at your stock chart. Futures-wise right now, Dow futures up 101 points, trading out at 15,196. S&P futures up nearly 11 points at 1703. Well, it's up 11 points now. How about that? At 1703. NASDAQ futures up 15.5 points, trading out at 3256. Russell 2000 up. King dollar back 13 ticks as we speak. Goldilocks up $4.50. 10 cents is how high silver is trading up. It's at 21.29. If we take a quick peek around the globe, let's go see what we've got going on over in Europe this morning. The FTSE is down 10 points. The DAX is completely flat. I mean completely flat. The Nikkei, that was up 25 points. The Hang Seng down 108. The Shanghai off nearly 2% last night. That was down 42 points. So where do we begin? It is Weird Wally Washington Wednesday. So there should be some weirdness and some wacky stuff that probably happens all during the day. That certainly is what it seemed like yesterday. But let's go take a look at stock charts, see if we can figure out what this market is trying to communicate to us here. Number one, we're going to start off by taking a look at let's go over to the daily charts now. Let's go take a look at the daily. Let's get a better indication on the daily charts. We'll take a look at yesterday's action in the ES Mini first. Let's do that. That's the S&P futures contract. And if we want to know what the future is, you got to start with the futures contract. So what we do know that occurred yesterday, first, absolutely normal. And what I mean by normal is that we had price move up to the 0.786 retracement level. Let me just make sure my stock chart here is completely updated. So we have price move all the way up to the 0.786 retracement level, 1708. Coming into that area with some wide-ranging bars. It's a natural area, a normal area to let some folks off of the elevator on the ride up. That's really what took place yesterday. If we take a look at this candle that formed, it's one of those candles where, you know, when the weather forecaster that you turn on, I don't know if you know if it's like this in your area. I can tell you in Florida, you know, the weather forecaster, they kind of look out the door, they see some windows, they see the door, they see some clouds out there, and they look a little gray, and so they forecast, well, maybe there's some dark cloud cover. That's really what took place yesterday inside the East. I mean, it's a forecast that maybe there's a cloud pattern out there. Well, we could have done that just simply by turning on the boob tube and seeing what was going on in Washington, D.C. out there. In any event, the market's just simply saying, hey, there could be a storm that's brewing. Of course, that storm, as we speak right now, is saying, yeah, you know what? Looks like it's not going to take place. It's just simply going to blow off out here. And if it does blow off, what does that mean? That means that prices will be set to at least come back and test that September 19th swing point. We're looking at 1726.75. But really, what we do have, and it's still in place in my opinion, and that is the A to B equals CD up that'll take the futures RA point here, the confirmed A to B equals CD up. And that was courtesy of that September 18th day, courtesy of Uncle Ben Bernanke. No, we're not going to go ahead and taper. The market took off from there, did it with volume. That says that what we're looking at in the futures contract is 1776. That's where price wants to eventually travel to. May have a couple of days of gyrations under. So that's what the daily chart is telling us. No change there. No change from yesterday. And if we go take a look at the 30-minute futures contract out here, what did take place yesterday was the completion of an A to B equals CD down. Now, yesterday when, I can't recall if we took a look at the 30-minute chart on the ESPN, it would seem unusual that we didn't. And the top of the rising price channel, that's what we're looking at here as we speak right now, the top was fairly well defined because we had a number of co-located opens and closes. The bottom, not the case. However, with the formation of yesterday's action with the A to B equals CD down, you can draw a couple of them in here. In this case here, I'm using the high that came in at 10 o'clock, no, at 8 o'clock in the evening on October 14th, 1709.75. The B point, this little high wave doji type candle at 10 o'clock yesterday morning. That low, 16.95, a little bit of a retracement, probably 0.618, 786 retracement up to the high at 11:30 in the morning at 1706.50, and then the market went ahead and made a low. Now, it made a important low out here. I'll blow this up on the screen. The 1-to-1 A to B equals CD, that price projection, 1691.70. Now, when it was producing that low, that 16, now that was the price target. What actually took place at the time frame of 3 o'clock yesterday afternoon is futures moved down to an actual low of 1689.50 versus 1691.70. Okay, absolutely within our range out there. But what it also formed was it formed a hammer candle. So that now, what's so important to understand about that hammer candle is that it was telling you that there was some buying pressure, that the bulls, somebody was out there defending that price area. However it was that it was being defended, and that's what we need. Excuse me, sorry about that. And that's what we need to know. So then what took place in the ensuing hours to come? Well, you had price move a bit higher. In fact, you had a little bullish engulfing candle, which was confirming that hammer out there. And then you had the futures move down to that 4 o'clock time frame. You know, because yesterday 4 and 5 and 6 and 7 and 8 o'clock or so, you had all kinds of fear coming out there. In fact, until about, well, I guess it was about 7:30 in the evening, we saw the futures move up. Now, there was a news report out there that, okay, the Senate was going to go ahead and take over. They were going to come up with their own plan. But what it did do, okay, and what's communicating to us here, is you had another bullish engulfing candle form with a wide-ranging bar. So you've got really this area here, the 1691-ish, we'll call it 1689.50, should be strong support. If that area gets broken, it spells double trouble. But yesterday, whereas we really didn't know what the the bottom portion of the rising price channel, because all we really had was a couple of start points. It wasn't working out. The angle along the bottom wasn't really matching what we were seeing along the top. However, this morning, and really last night, all of that really changed because we had that hammer. Because you see, if you use the most number of co-located opens and closes out here, it happens to just simply coincide with the bottom of that hammer candle, with the bottom of that bullish engulfing candle that took place at 7:30 last night. And so what did futures do? Well, they moved up. And then all of a sudden it was like, well, maybe there's going to be some problems. You had that little doji candle there that says resistance in this case here now is 1706.50. So if you're long, you're going to want to see price get above 1706.50 today. Because the top of a doji candle, that is resistance, folks. So what did the market do? It pulled back. Now it pulled back into the bottom of that rising price channel. And this is important to know because if wackiness takes place on Wednesday, and the bottom of this rising price channel gets broken, It has to make you say, something to think about. Maybe even get that sphincter muscle, if you're long, a little bit tight out here because of the uncertainty that's coming out of Washington, D.C. Now, what also is interesting that took place coming into the time frame of 7 o'clock this morning here was there was another hammer candle that formed along the bottom of that rising price channel. So how certain am I that this is a good rising price channel and that these are important areas of where the battle is taking place when we take a look at the S&P futures? And then, of course, coming into the time frame right here at 8:30 this morning, another bullish engulfing candle. I can't tell you why prices work along these price channels. What I can tell you is when they do work, they work so well. And when they fail, there's a ton to learn from failure as well. I'm not sure which one we're going to see today. I absolutely don't. But we'll be right back. We'll keep looking at charts. Our call number is 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
The Art of Timing the Trade Charts is the only software package available with a built-in Gartley and Butterfly pattern scanner that will scan thousands of stocks, ETFs, and indices each day to find these patterns and then make them available to you with just a single click of your mouse. Tom O'Brien and Dave White will be hosting a live event for all Art of Timing the Trade Chart subscribers on October 16th at 6:30 p.m. Eastern. And for a limited time, we're offering a promotion where new signups can gain access to this powerful charting software, as well as the live study session workshop coming up this Wednesday night for only $1. That's right, $1 for the whole month with the class included. Remember, this offer is only good till this coming Wednesday night when the workshop takes place live with Tom O'Brien and Dave White, so don't delay. For all the details, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Hey, have you gotten your list of all the great butterfly and Gartley patterns that have set up out there? Have you gotten that list? Because if you haven't, you've got to ask yourself, why? I mean, we're talking a $1 investment that you're going to make in yourself for the Art of Time and the Trade Charts. You know, that workshop is going to be held this evening. It's going to be from 6:30 to 7:30, I believe, is the time frame on that. $1, folks, $1. Please make that investment in yourself. Look, if you can't be there live, it'll be archived for you, but you want to do it. There's some great trade setups. I saw them coming. You know, there's nothing like having one touch of a button to do where it's already the scan is done for you on thousands and thousands of stock charts out there to give you an idea of a pattern that either is or maybe setting up that you could take advantage of. So do yourself a favor. Invest that $1 in yourself. All the details are on the homepage of TFNN.com. You really need to be able to, you need to do that. You just do that for yourself. You give yourself that gift. You know, we're starting to get into the holiday season. Right, we got Thanksgiving just around the corner. Now, how about that guy who passed away? You know, sorry to hear about that. The guy who I guess created gummy bears out there. Now, the amazing statistic that I was reading on my phone last night was just blown away. And I'm sure you are as well if you already know that statistic, that there's 100 million gummy bears produced each day. Can you believe that? No wonder he is a billionaire. I never knew gummy bears were so big out there. I've actually, I've never had a gummy bear, but now just in honor of just knowing that, I ought to go out and get at least one gummy bear. Let's see, what color would be your favorite gummy bear out there? I would probably choose yellow. I like that lemony type of flavor. I don't know if yellow gummy bears have lemon in them, but they should. Anyways, let's go back to these markets out here. Let's take a look at what can we learn here from this chart. This is the NASDAQ futures. Now, if you recall, we have the NASDAQ futures. They were trading in a 60-point consolidation range. It's a sideways range. It's relatively easy to identify on any stock chart. And what's cool about consolidation ranges is when they do break, whether it's to the upside or the downside, and 65% of the time, they're going to break in the direction that they came from. This one did not do that. This one broke in the other direction because this consolidation pattern, as you can see, was coming from the lows out here. Now, the price projection on any consolidation is going to be equal to or greater than the actual consolidation. In this case here, the bottom of the consolidation of the NASDAQ futures, it was down at about the 3189 level. 3189 less 3189 less 60 points. What does that make it? 3129. I've got 3127 on my chart out here. And what as far as where the price projection was, I was probably using a little bit lower low back here. In any event, so 3127, 3129, does it really matter? No. You know that's your price projection. And quite frankly, until you see some bulls run in, and it helps you certainly with stop management. In this case here, what happened once that consolidation level was broken? It was broken with conviction. It had a wide-ranging bar at 11 o'clock in the morning. That was on October 8th. And where did price finally run to? Well, it didn't stop at 3127 or 3129. It made its way all the way down to the 3110 area. And then we finally saw the bulls come in, and that's what took place here at 1:30 in the afternoon. That was on October 9th. Nice big wide-ranging bar, bullish engulfing candle. That was telling you, okay, the cavalry has arrived. And, in fact, that's what took place. Now, we don't have to worry about that sideways range. Now, what did happen here, which we can note, and it's important to note, is when price will break a consolidation level, what will typically happen is price will try to make its way back up there. Oftentimes, it might meet with rejection. In this case here, it didn't meet with rejection. It met with welcome open arms. Come on into my consolidation. And why was it doing that? And when it did that, what was a signal? The signal was it was going to move back up to the top of the consolidation. And in essence, as we move this sideways, we can see that is exactly what happened. The top of the consolidation right around 32.51. You know where we're trading right now, don't you? 32.53. So you can see price got back up to the top of that consolidation box. Now, for our purposes, we can go ahead and get rid of that consolidation box. And so we're going to. Boom, it's gone. Now what other pattern is out here? That 60-point move, boom, it's gone. But what I want you to do is I want you to be able to learn from that. I want you to go apply that to whatever stock charts it is that you're taking a look at. You see, it doesn't really matter what this says in the upper left-hand corner that's in NASDAQ futures. This works on anything, any time frame. And it's one of the easiest patterns to learn and to trade out there. So if you're new to technical trading, this is a great place to start. The next great place to start is my newsletter service, Mastering Probability. If you are looking for an education, that is it, folks. That is packed with so much education. And then even, we're not going to talk about that right now. Let's talk about the pattern that's out here. We took a look at the rising price channel inside of the S&P futures, and what we can see that we've got here right now, same kind of rising price channel. In fact, what we'll see is we'll see it amongst all of them on the 30-minute charts. Right now, Dow futures up about 96 points. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 91 points, trading out at 15,258. S&P up 11, trading at 1709. Composite up 25 at 3819. Russell 2000 up 6.5 points, trading out at 1086. Apple up $3 and change. Leading the charge to the upside, Advanced Auto Parts up $15 and change, up 19% here. I believe they purchased a company out here. Let me see. Let me widen this out here, make it a little bit easier for me to... Oh, I didn't mean to do that. Of course, you guys can't see what I just did there because it's on a different screen, but I can tell you I didn't mean to do that. Let's slide this out a bit here. So they have... They out what their numbers, it looks like here. Their preliminary total sales, they say, are going to be up about 4.3%, about $1.5 billion from $1.46 from the prior year out there. Thought they maybe had purchased Advanced Auto Parts to buy General Parts for $2 billion deal out here. In any event, they are to the upside, leading the charge. Pioneer Natural Resources, PXD, slightly behind them. They're up about $12, up 6%. RCPT is the ticker symbol. I'm really not even going to try to pronounce the name out here. It's up 18%. It's up $5 because I would blow the name out there. We're not going to do that. Vision China Media. That is trading up, well, it was, and just there we go, VISN. That's up 22% this morning. That's up $3 and change. Netflix up a couple dollars. Solar City up $2.21. Mattel out with earnings. They're up 4% here this morning. Abbott Labs up $1.77. Goldman Sachs up $1.53 to the downside, and I mean to the downside. With looks like some conviction behind the move here, and looks like that is going to be breaking a price channel. Not that good is Stanley Black & Decker. SWK is the ticker symbol. It's trading off 14% right now, down $12 and change out here. Their third quarter income $730 million versus $642, so no problem there. Let's see where, if I can find a revenue number out here. Revenues say their revenues are up 10%. $2.8 billion. Their organic growth 4%. So they must be forecasting giving some poor guidance out here because they are just truly getting the Stanley Black & Decker hammer as we speak here this morning, gapping down with volume. We'll take a look at that stock chart momentarily. DSW, they are trading down about 2.5%, off $2 and change. Omnicom Group, OMC, down a couple of percent, down $1. Green Dot Corp is a little red this morning. It's off 6%, down $1.28. St. Jude Medical off 2.5%, down $1.30. Linear Technology off 2.5%. Not a ton of big names to the downside here as we speak. So let's begin by taking a look at Stanley Black & Decker. Now, one of the things that it's doing, number one, it's really, we'll see if we can find any clues out here as to, should somebody have been paying attention to this if you were long this equity, because a big gap down and big volume. Now, I'm going to pull the stock chart back. Did this just while we were on the break as the market was opening, and notice that they were the leader in the clubhouse on the way down. This is breaking the rising price channel. It goes back to October of 2011. You may remember back in October of 2011 when we had the big euro scare that was going on out there, formed a nice solid bottom in the marketplace. And it's been in a nice rising price channel ever since then. Unfortunately, looks like it's threatening. Day's not over, but it looks like it's threatening to bust through that price channel, that would be pretty darn bearish. Already a pretty tough move considering we've only been trading for about 8 minutes, and it is down with 1.7 million shares in that 8-minute time period. It did make its high out here back about a couple weeks ago on October the 1st, did that with 1.4 million shares. So it's also going against a swing point, but not a swing point that's got any kind of volume. That's on the trading session of June 24th. That's got 1.6 million shares, the low of which is 73.77. But if it closes at 73.77, it'll break that rising price channel out here. The only real signals that I can see right now in just a quick scan of Stanley Black & Decker, and again, the ticker symbol here is SWC, was this first bout of volume off of this first volume, but even that was not really wide price spread. It's not exactly as if you would call that volume off of the top. This thing did make a high going back to August 14th, 896,000 shares, and it did gap down the very next day, but only 885,000 shares. I wouldn't say that was a huge signal out here. This high volume bar where there's no wide price spread, not necessarily, a major signal out there. So I don't know in the case of Stanley Black & Decker. Yeah, it's got some high volume bars that are down below out here, and they're not exactly wide price spread, accelerated volume to the upside. Maybe that would give you some of the clues that you'd have to say, something to think about. But this thing is breaking, and it is breaking hard to the downside, and that is on Stanley Black & Decker. Now, on the other side, Advanced Auto Parts, that's breaking to the upside. That's got some wide price spread, and it's got accelerated volume big time out here. Take a look at this thing. This is trading up right now about 17%, up $14 and change from last night's close. So that is a beautiful thing. Let's put this back on a weekly time frame, see if we can see what this is doing here. So it's up at all-time highs right now. It's taking out a little resistance area that was really set at the level of April 27th. It's a weekly chart we're looking at. 93.08 is the number, 4.7 million shares on that week. So it's going to have the volume most certainly to take that out. It was a big downdraft out here. I think that was an earnings report or something. That took place during the week of May 18, 2012. But this thing is off to new pastures so long as it closes the week above 93.08. Otherwise, all this will be doing is getting into a little trading range here, the top of which would clearly be the 93.08 range, and the bottom be that nice little hammer candle that formed in the case of Advanced Auto Parts, and that was at the June 29th, 2012 level. So a big, important hammer candle that was down there, and that looks like pretty good support inside Advanced Auto Parts. Let's take a look here at, Regeneron Pharmaceuticals up $9. Why do I say that? Why am I, why do you detect that in my voice? Let me go see if we can find the chart, because we were talking about consolidation patterns earlier. Maybe it's here in the earnings section. Give me a second here. We're going to try to find Regeneron. Yeah, here we go. Well, maybe it's okay. Regeneron Pharmaceuticals. This is one we've got to keep an eye on. I'm keeping an eye on. Apparently my eye wasn't that kept on this thing. Because in Regeneron Pharmaceuticals, it's got some swing points. It was traveling in a consolidation area, just like we were taking a look at on that shorter-term chart, the NASDAQ futures. Now, the top of the consolidation, $284, 844,000 shares back there on May 15th. Then little doji candle out here, July 2nd. Remember, doji candle, that's a resistance level. And 282.27, 855,000 shares. And what happens? It breaks above that doji candle with 1 million shares. That's some conviction. That's some accelerated volume. Does that, breaks out of that on September the 13th. So if you take a look at the yellow box on top of the wider consolidation level, that gives you a price projection. Looks like right around the $340 range. That's where it eventually wants to head to. Now, what is cool about this equity is that when you break out of a consolidation, it has come back and it's tested that level. Now, the only problem was that on the test on the way back down, which was on October 9th, it did it with 1.4 million shares. You like to prefer, to see it come back on a lighter volume out there, and then coming out of here, it hasn't exactly had a ton of conviction. This morning, though, 153,000 shares already in the first 15 minutes of trading. That's not too bad. So Regeneron, now that's just remember, when you break a consolidation, and this one here, 65% of them break in the direction they came from. So this was signaling to us it wanted to move to the upside here. A nice-looking stock chart. Really nothing wrong with this other than this one big high-volume bar out here. But this high-volume bar, we talk about be careful with high-volume bars. This one's actually been tested. Let me pull this back here. Actually, I take that back. It has been tested, by the way, and I don't know what was with that high volume, but let me just update my chart out here because there was no wide price spread behind it. It was actually the trading session of April 30th out there. No price spread at all. But regardless of whether there was price spread or not, it was tested, and it was tested all the way back here on June 24th as the lows were being put in here. And that's on Regenerate Pharmaceuticals, so all looks pretty darn good in that equity. Let's take a look here at Pioneer Natural Resources. PXD is its symbol. Let's go see what it is doing here this morning. It's trading up. It's the second in the clubhouse here, trading up $8.73 right now. It's up about 4%, so gapping up here. Looks like this is at least gap number 3 that I can see out here. However, it's not a 3-gap play because it's not the widest gap. The widest gap came in on this second one right out here, the trading session of August 1st. Gaps up with 4.2 million shares out there. This morning, up with 352,000 shares in the first 15 minutes of trading, taking out a swing point that's only got 2.3 million shares. So it's going to have the volume to do that. Pioneer Natural Resources looks like this equity is also at its highs. Let's put this on a monthly chart out here. Yeah, so this thing is at its highs. If we take a look on the monthly basis at an A to B equals C to up, let's go see what that pattern looks like. Today, hitting the 1 to 1.618, A to B equals CD. 211.45 is the top of that number, and the actual intraday high so far is 212.16 out there. But this still looks extremely bullish. Says that it probably will go ahead and not probably says that this thing will go ahead and head up to the next level, 247.33. PXD is the ticker symbol. That is Pioneer Natural Resources. Let's go check out. So we've got the market. The Dow's up 79 points right now. I want to go back into our core group of stocks that we pay attention to. Let's go see what we've got going on here. Let's take a look at. What are we going to take a look at first? So we're going to take a look at Google. We looked at Google yesterday. We know that Google tried to bust out its lows, its hammer lows. Couldn't do that. Can't bust them out to the downside. Go ahead and try to bust them out to the upside. We're going to get rid of this A to B equals CD down at the moment. Google moving higher today. It's headed for the most recent swing point, which is the trading session from September 19th. 895.40 is its next target. It's at 885.34 right now. 905.99 is the actual high. If it can take that level out, it'll go ahead and travel all the way up to its swing point high out here, which is at the 927 level. I imagine Google, just like Priceline, wants to go check out that $1,000 peak level out there. And I am certain that it will, how can I be certain about anything? I can't. But it sure seems like that's what it wants to do. We'll be calling Google at one point on this show and say, Google at $1,000. Now, Apple, that's a whole different story out there because, see, the Google chart hasn't broken down, whereas Apple has. But when we took a look at Apple yesterday, it's trying to bust through its resistance level. So let's find the Apple chart out here. Should be right in front of me. There it is off to the right-hand side. So Apple now, this is the weekly chart that we're looking at. It's going to try to take on the 507-ish area. 513.74 is a good number to be paying attention to. 514.99. So let's just call it 515 out there. A nice song by the Who out there. So yeah, we're going to definitely call it 515. And as we take a look at this, if this can close above 515, that resistance level will then become support, and we'll see Apple make its way up to the 582 number. Now, what you'd like to see if you're long Apples, you'd like to see this A to B equals CD complete out here, and that says on a weekly basis close above 513.74 with more than 59 million shares. That would give you in my opinion, that would give you a move up to about the 606 to 636 level after it takes a rest maybe around the 580-ish range. But that's on Apple. We'll pay attention to that from a breakout standpoint. Let's go take a look at IBM. IBM is going to be out with numbers. I believe it is. So that would be, this afternoon. How about that? So this afternoon after the bell, we've got IBM releasing their numbers. Now, of course, in the case of IBM, to me, the stock setup here in IBM is one of twofold. Number one, it's tested. It's tried to break out the lows of the consolidation pattern. Has not been able to do that. That's the most bullish thing we can say about the Dow right now, is that IBM has not been able to bust out its consolidation lows out there. that sets up that somehow the market's going to respond favorably to the IBM news. Don't know if it is, but it's tried to bust out the lows, hasn't been able to do that. Now, the real key on any kind of break inside IBM is going to be getting above this little subcorrection price channel that it's in, this descending price channel. Those are the blue diagonal lines that you're looking at on my screen out here. If you take a look at what that price level might be, let's just take a look at retracement levels. Looks like a close above 190-ish. Yeah, it would be a breakout above that descending price channel, and that would say, okay, you can't bust it out to the downside inside a consolidation area. Let's go check out and see what the top of that consolidation level looks like, and that's in the $211-ish range out there, and that's a nice consolidation level that IBM has been traveling in. So if you get a break, you get a close below, where you was kind of using the 181 mark. We did have a swing point that most recently formed now on October 8th. That's the low so far that's been put in at 178.71. So we're going to say somewhere a close below 178.71, and guess what? 30-point consolidation to the upside. We could probably write that off. We'd know so by the end of the week, and instead what we would be seeing is a 30-point move to the downside, and that would be very, very, very bearish. So we want to keep an eye on IBM, really how it responds more so tomorrow morning versus in the overnight hours here after earnings are released after the bell. But right now it's really set up, as it looks to me, to actually move higher. Right now we've got the Dow. It's doing a bull dance. It's up 92 points. S&P is up 10. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest. And Hertz Global has a core position for 6 months before exiting the position. A current position, entered as a turnaround company with good technicals based on Basil's waveform, is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to The Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to The Opening Call, just visit the front page of TFNN. TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Had a request to take a look at Kinder Morgan. I guess they're going to be out with earnings after the bell today. KMP is the ticker symbol. Right now trading out at $80.26. So if we take a look at this stock chart here, I've got the weekly chart on my screen. So the weekly chart shows really a consolidation pattern that's in place. Now that consolidation pattern, I would say, really consolidating between the area of about 77, we'll call it $78 to about 90. So what's that, 78, 88? So you got about 12-point consolidation. Now it does have some decent support here at the lows, and that's really what you need because this thing is in a downtrend. This has some serious selling pressure inside of it. Now, it's got a little hammer candle here that formed the week of November 16, 2012. So that's at $74.76 is your Fisher cut bait level. So you don't want to see it close below 74.76. I'm not saying that's what's going to happen, but, boy, that's a number to be paying attention to. On the weekly chart out here, you've got a nice bullish engulfing candle as well the week of June 28th. So that low is 77.71. But I'd really be paying attention to that hammer candle that's out there on the weekly chart. The daily chart, as we switch time frames out here, that shows you that little descending price channel that it's in. This has got selling pressure in it, and today's really not giving any other indication otherwise. What this does say is if it the way that the market responds numbers-wise, the upside potential on this, much like as we were taking a look at IBM, so a similar-looking pattern is going to be the top of this descending price channel out here. So where's that at? I don't know. It's in the $81-ish dollar range, $82 range out here. So I would say unless this is a long-term holding for you, that you might want to take a look at putting your money to work someplace else, maybe something that has more of a because to try to put this in perspective, here's Kinder Morgan's chart versus going and taking a look at the S&P 500 or something, which isn't a very powerful. In fact, we are in the strongest uptrend since the March 2009 lows. And when I'm talking about the uptrend, I'm referring to coming off of the November 2012 time period. Believe it or not, well, you don't have to. I don't care. Well, it's not that I don't care, but the work that I do says we are in the strongest bull market run, strongest bullish run since the March 2009 lows. That's how strong this is. So, at some point in time, that's going to come to an end. There's no question. But right now, it's the strongest leg going all the way back to 2009 out there. And in the case of Kinder Morgan, it's had a strong run going back to 2009. But right now, it's struggling out here, and it's got some limited upside potential. In any event, right now, let's see here. If we take a look at the markets I saw during that time period, they just took off to the moon. You've got the Dow futures. You got the Dow's up 186 points out here. And the S&P is up 19 points, trading out at 1717. So let's go take a look at that here. Well, we're going to do most of that during the next hour, but let's pull up the S&P 500. Because if this is traded at 17.18, it's going to get up to the highs at 17.29 pretty quick out here. So you can take a look at yesterday's dark cloud cover. Of course, we got a lot of time left in the session here today, but somebody must know something out there. Must be some grand bargain that has been etched in stone. And let me go over to the intraday chart, the 30-minute, the rising price channel out here. Boy, some big volume coming in, too, during this half-hour session here. Contract-wise, we were up at 300,000 contracts. So there's some conviction behind the move to the upside, folks. If you're off to start your Wednesday, have a wonderful Wednesday. Always remember, you have an amazing power within yourself. And that power, folks, it's so strong, you basically can do anything you set your mind to. Have a great Wednesday. Look forward to seeing you soon. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.